I lost $500 trading NASDAQ futures this week. And after looking over the trades of this week, this is what I realized. This one mistake I realized that if I would have caught it, I would never had took any of these trades to be down $500 this week. Let me explain. First and foremost, I'm gonna start off with going over my trade from this all my trades from this week. I'm gonna go day by day because I traded Tuesday, Wednesday, and Thursday, and all of them were ill trades. So I'm gonna start off by showing a screenshot of my trade that I took from Tuesday. Beginning with Tuesday, this was Tuesday's trade. It looked at A plus to me, had this open range discount gap, and I wanted to see it get traded to the zero point 0.5 of it. Okay, you see I took longs right here, right? Should have never took long. Now I'm gonna explain something that I learned from the inner circle trader. Um, Going over like the past few days of learning, I was like, man, I took dumb L's this week. Let me see if I really missed anything. And I learned about something called a Dylan range, where he just dropped live recently. He was going over something called a Dylan range, and I never took that into consideration in my trading, and I should have been this whole time. Um, because it's key to the market where smart money runs off of. So, L, you didn't know what a Dylan range is, right? So now, from my perspective, and from Hody Top, what is a Dylan range now? So you see this daily chart right here, right? You see this daily chart right here, right? This is the Dylan range, right? Why is this the Dylan range? This low right here, we created a low, and we took out all of these lows right here. So once I seen this low right here take out all of these lows, that becomes the Dylan range low right here. And then I seen, right, this high get taken out, right? And then after this high gets taken out, we create like this this could be a high, then it keeps going up and up. This one is considered a swing high, so we want to count this one because it has some to the right of it. You would consider this one right here because this high right here, this swing high right here, took out all of these highs up here, and then this swing low right here took out all of these lows right here, right? So I draw my Dylan range from the top that took out all of these. This was a recent one, the high that I got taken out. And then I keep this one as my Dylan range low because it just took out all of these lows. I'm not going to do this low, this swing low, none of these swing lows right here because this one hasn't got taken out yet. So from this low that took out all of these lows right here, and then this swing high that took out these highs right here, created this swing high, which made all-time highs. That is the current dealing range that we've been in ever since from our from October 10th and then October 30th. That's the current dealing range we've been in, right? So this is the zero point 0.5 of it is the below it is the discount of the dealing range, and above it is the premium of the dealing range. Now, what do we do in premiums? I want to shorten premiums, and what do I want to do in a discount? I want a long in a discount, right? So boom, and then what will be the new dealing range? When if this swing high or this swing low right here gets taken out, then a low that will be created will be the new dealing range, or a high above here will be the new high of of a new dealing range. If either or gets taken out, boom, we'll put it at the low that gets created under the dealing range. If this high gets taken out, we put it at the high, the new high of a new dealing range that get taken out. But simple as that, right? That's what the dealing range is. Um, So, based off my trade I just showed on Tuesday, let's get into Tuesday, the actual day, and I'm gonna go initially to the 15-minute chart, right? And I'm gonna go to Tuesday. Okay, I already got the session levels on here. I think I already got this trade. Y'all was back testing earlier, and I got this trade, right? So Tuesday, okay, keep in mind this zero point 0.5 right here is the dealing range, right? And we obviously see on Tuesday that we're in a premium of the dealing range. Okay, so what I'm gonna do is I'm gonna back test and see was there a short opportunity during Tuesday, and what I'm gonna put out initially. Now I need my midnight opening price for Tuesday. Um, where is that at? I will go right here because that's the midnight opening price. New York midnight. These are key opening prices. I always want to keep on my chart. And for shorts, you want to short above either one of these. So I got midnight, then you get 8:30. Um, you get 8:30 opening price, and then you get 9:30 opening price, right? And this is going from the dealing range. This is going to determine my narrative and my bias going to every single day from now on, right? Then that's 9:30's opening price. Boom. After this, I'm going to go to a 1 minute chart. So what highs do I see? Like from Asia session to 7 a.m. I'm looking at what highs do I see, right? Obviously, we got after 7 a.m., right? We got these relative equal highs right here. And if I want to see shorts, I want to see price like at this point go above 9:30 opening price or 8:30 opening price. And I see these relative guys that got created after 7 a.m. Now I'm gonna go to the 1 minute chart, right? And let's go to Tuesday. Okay, so currently on Tuesday on the 1 minute chart. Now, what do I see? Let's see some. I see these highs get taken out, and after these highs get taken out inside of a premium, okay, I see a market structure shift, and then this fair value gap right here gets created, right? And that would be key. Or you could get it on the inverse of this one. But I like this fair value gap that got created. Then it taps back into it during the 950 to 1010 macro, right? Would have been a good um place to take profit at, which it will be a previous session or previous day low. Which the easiest low right here is this one, and it's in this fair value gap right here, obviously. So that'll be a good one. And we got a 15. That was a 5 minute, but we ultimately got this low right here off of the 15 minute, right? So that this initially would have been my take profit area for a short that would be on Tuesday. But no, instead, what did I do on Tuesday? That made me take a huge L. I longed inside of a premium of the NQ's dealing range. Okay, now that's what a coincidence, right? That was just Tuesday's price action. Now, let me show you guys what I did on Wednesday. Moving into Wednesday, this looks like a good entry, doesn't it? This looks like a perfect entry. Got the middle fair value gap on that Croydon level. You know, we got good first presented fair value gap up there. We're below 930 opening price. But no, but no, I automatically end up getting this trade and it doesn't go my way. Cause why? I was longing. Now, let's go to where the market was at from the dealing range, the same dealing range on Wednesday of this week. So, already looking at it, Wednesday of this week right here that I took a huge $500 loss on this week, we are like price just stayed in a premium of the dealing range where I missed out on this key thing that I missed out on, right? Now, let's go to the 15 minute and let's see where it wasn't any opportunity that I would like to get in at on Wednesday, right? So, looking at Wednesday on a 15 minute chart, what did Wednesday end up doing? Okay, Wednesday we just end up opening up and coming down. But I started looking at my charts and searching for stuff at 8:30 if I'm being completely honest, right? But I don't start upstream on my lives until like 9:30, but I'm always on my charts before then and just looking. All right, bet. So Wednesday, 9:30 open. This is let's go. First we're gonna look at midnight opening price, right? Because I keep these opening prices on my chart every single day of the new day because I want to see price go above them if I want to be in short or below one of them if I want to be long for the day, right? Um, Let me go to 8:30, right? 8:30 opening price, boom. And then we go to 9:30 opening price, right? Which was right here. Now, just looking at it based off of a 15-minute chart, we're gonna see what did it take out, right? Are you coming to today? We're gonna go to this is gonna be the London session. It's gonna be the 2 to 5 London, and then 7 a.m. Okay, you see we got these Asia low right here. I got Asia low on my thing. Okay, we got this Asia low. That's a simple little target, right? Asia low, right? Accumulation, manipulation, distribution, right? We accumulate in Asia, manipulate in London, and distribute in New York, right? Okay. Hmm. What do we take out? Not 8:30 opening, right? What did we take out? We took out uh, a fair value gap, a sell sign imbalance, buy sign inefficiency from I believe, right? We took out this. Let me see. Yes, we take out this. Let me change it back to black. We take out this sell sign imbalance, buy side inefficiency. This 15-minute that was formed a little after London session, right? But we ultimately take out this high that was created after 7:30 also. After 7 a.m. I'm sorry. Um, and we take out that, right? Coming into the 8:30, so I usually we want to trade after 8:30, right? Right at the 8:30 opening. What happens? Right? And not just what happens, where are we at? We're above the zero point 0.5, so we know we're in a huge premium based off the dealing range, the thing that I didn't have correct, right? That I didn't have on my chart this whole time, the dealing range of the daily chart. So based off this dealing range, we were in a premium. What did I do based off the screenshot I showed earlier? I longed in a freaking premium, right? Tripping. Um, okay. Now, ideally, we came into this 15-minute sell sign and balance buy sign efficiency. We're in a premium based off the daily charts dealing range. So I want to see shorts, correct? So I would get in after 8:30. 8:30, what do I see? The liquidity, the stuff that happened before 8:30. I see that we obviously take out this right here, right? And then right, we take out open 8:30 open. Obviously that this 15-minute sell sign to balance buy sign efficiency from the 15-minute chart got taken out. Now, that's all I really needed to see. And I see we're still above it, right? This was a this was an entry, yes, but I'm not gonna count it because it was after. Like I don't, I'm not, I'm being completely honest. I was not trading this time. Um, but shorts did end up playing out. This would have been a good entry for me right here when I seen this got inversed. No, this right here. I'm tripping. Um, what I want to see was this get inverse right here, right? Okay. This it was obviously an inversion of this, and then what is this opening price? We tap back into this opening price, right? Order block, simple order block, boom, and that would have been my entry, and it was obviously above 830 opening price, and it was all the way above midnight opening price. So that would have been a good entry for me, targeting all the way down to these London lows, right? Good little stop loss, 18 points. This would have been a huge R trade. Bam, right? Now, you can say I'm cherry picking, but I'm just showing like I am kind of cherry picking because this is back testing. What do you like? It's back testing. So, and this would have been good interest for me because I usually enter off of stuff like this on a normal trade, right? But the thing I missed is was the dealing range. Um, that would have been a good trade setup because why? We were in a premium based off the dealing range, and you want to shorten the dealing range. Now, going to my last but not least, it is least what I'm talking about. The last trade of this of the today that really not today of this week that really made me down bad, right? Down the whole 500. Let's go to it. Okay, now coming into Thursday's trade. What do I do again on Thursday? I am long. Why? Cause I seen obviously we had a open range discount gap. We had this inverse during the macro. And I'm like, bet pushing into it, but I want to see it go here. The thing about this trade is ES went to it, but NQ didn't. But at the same time, L, was you supposed to be long it anyway? Based off the dealing range that we found out earlier in the vid, L, was you supposed to be long it anyway? Let's see. Let's see where the where Thursday at of the dealing range based off the daily chart. Let's see where it was at. Now, coming into the daily chart based off of this dealing range. Where was the opening of this day at? The opening of it, of course, it was in a premium. We came down a huge 2%, and it did end up going into the discount of the dealing range, right? But the opening of the day, when I was looking at it at 9:30, it looked like, a good trade for a long, but it wasn't because it was still in a premium of the dealing range, right? And of course, where I messed up at 2 hours, if you go back to my lives, I was looking at the 20-day empty range, high to low. But this whole time, I should have been looking at the dealing range, since I'm day trading and going based off the daily chart. Also, this is the dealing range. I should have been going off the dealing range, but based off the dealing range, the open, and when I got in my trade at that, you guys just seen my huge L from Thursday. The price was in um the premium again when I should have been shorting. It was in the premium, so shorts, right? You would think, right? But no, what did I do? I end up getting into longs. But let's bring my attention to the 15-minute chart, right? When I was trying to get in longs on Thursday, but no. What happened Thursday? Let's see if I could have had a good entry on Thursday to get in some shorts. So first we're gonna do the same thing like we did on the other previous days. We're gonna chart out the opening price. We're gonna get the midnight opening price, right? We're gonna get the midnight opening price. We're gonna get the 8:30 opening price. Right? 8:30 opening price. And then we're gonna get the 9:30 opening price. Right? Okay, now we got all of these opening prices. I'm gonna see where it was a good place for me to get in shorts at, and where did the market come up and take out liquidity to get in shorts, right? I don't think it was an opportunity for me. Actually, if I'm really looking at Thursday, the market open, right? Yeah, I don't think I would have had an opportunity on Thursday because we just started going down 8:30. Let me see something. Also gonna add the previous kill zones too. Yeah, I ain't gonna, we didn't touch this high. So what about after 7 a.m.? Shouldn't even touch nothing either. So looking at Thursday, I should never even got in a trade. It was no opportunity for me to even get in a trade on Thursday. I ain't gonna lie, cause look, I tried it out all the previous sessions, right? And I'm looking at the 9:30 open, and it just started going down and down and down. I shouldn't even long. I should just let market did what it did. You know, it would have been no inch for me because I'm looking at the 15 minute. I'm seeing do we take out any liquidity, any highs or anything. But no, Thursday was just the day we went down. Like I'm looking at the 1 minute. It wouldn't have been no itchy for me at all. So and I knew the dealing range was in a premium, right? And it looks like it would have been good for shorts based off the back testing and the knowing of the dealing range, the knowledge of the dealing range I have now. Yes, it would have been good for shorts, but I wouldn't have shorted because and then take out no like liquidity that I would like for it to take out. It did take out this high right here, but I don't really care about that. And then started going down, right? So Thursday would have been one of those days where I just had to let the market do what it do. Based off my knowledge now of the dealing range, I should have never had long this week. And yeah. So coming into conclusion, I'm not even gonna go over Friday because I didn't take a trade on Friday because after this huge ass drop on Thursday, I didn't even trade Friday. But now I'm ending with it here. After knowing my knowledge of the dealing range, right? And looking at it, that's why I back test. That's why you back test and forward test. And right, I was searching. I'm like, man, that was a huge L I took. And then I figured out something called the dealing range due to the Inner Circle Traders live that I watched. He explained something called the dealing range, and I probably skipped over it. Just me, just trying to fast pace stuff. It's okay to be patient and take your time, L. But I did have good risk management. I didn't blow no paper trading account. You can't even blow a paper trading account if you don't know only paper trade. But yeah, I had good risk. But now that I know the knowledge now of a dealing range, I'm gonna know better than to take L's like this. And when coming into the days, right? I know if market is in a premium of the dealing range, I know to have a narrative to short to get in shorts and have a bias to be in shorts. If price is in a discount of the dealing range, I know to be in longs and to get into longs only for my bias. Now that I know that, I'm gonna fix and improve off it. But now, what is a dealing range? A dealing range is you see how this low right here takes out all of these lows. Okay, so we know this is a low of a dealing range. That's simple. See how this swing high right here like takes out all of these highs and create this swing high right here. So that makes the high of the dealing range to that's how I draw it to the low of the dealing range, right? To the high of the dealing range to the low of the dealing range. Now this 705 is a discount target. Why is it a discount target? Because when you're in a market maker sell model and it's in a sell program, it don't gotta go all the way to this low. It can go as far as 0.705 and start right there and go back up, and we can rate and we take out this high, create a high above it, and that's our new high of a dealing range. So with this knowledge, I learned my lesson. I know how to move forward from it, And yeah, man, this how I lost $500 this week, and was the lesson that I learned and how I'm gonna move forward on and see how I work from now on. Not saying just because I learned this, I'm gonna be a trader that doesn't take any L's. L's is a part of the game. Of course it's gonna happen. But now that I know this, it furthered my knowledge even more and know how to come into the market and what to expect. But with that being said, Lord willing, I'll catch you on the next one.